Hey there, Lincoln here from bullacademy.org. Today I want to talk to you about SoFi and Joe Biden. Go Brandon, in case you're a Republican out there who doesn't like Biden. But anyway, Joe Biden just announced that he is extending the student loan moratorium to May of 2022. Not January of 2022, but to May. So that means that SoFi and other lenders aren't going to get revenues from student loans as they were before the pandemic. And the reason for this is because the economy is going to be struggling again because of the new Omicron variant, and we don't understand this variant yet, and there's still lots of uncertainties around this pandemic, this virus, and they want to make sure that the economy and everyone in it, the people, the actual people in the society, are doing okay, can afford to actually live, pay for their housing, pay for food, pay for childcare, pay for all of the necessities of life, and continue to work, right? Because if people can't afford to live, they can't work, and that hurts the economy. So that's why they're doing all of this. And I'm fine with it. Some people out there would take this as a signal to sell, but you have to realize that those people are short-term minded. They're focused on a whole different game. Our game on this channel, bullacademy.org, is the long-term game. We focus on long-term bullish investing because that's how you build long-lasting, sustainable wealth. That's our whole mentality, right? It's the bull mentality. The bull mentality is that we know what we invest in, we understand what we invest in, we believe in what we invest in, and we hold for the long term because that's how we build wealth. And that's how we give ourselves the best chance of success on the stock market. It's been proven. You can ask Warren Buffett. That's how he built his wealth. You can ask Mark Cuban. You can ask Jeff Bezos, Elon Musk, whoever you want, right? Ask anybody who knows how to actually take the time to put in the work and continue building something over time and acquiring equity, right? Ownership of an asset over time. That's how you build actual wealth that's going to last you into retirement and do so comfortably, not by trying to get rich quick. So having that mentality of long term, you can then look at this a whole different way and look at all these short term setbacks a different way. People who are focused on the short term don't have the option to focus on the long term or to see things from the long term view. They have to think about what's happening tomorrow, like literally tomorrow, because that's how they've built out their investment thesis. So if tomorrow comes and something goes wrong, or Biden changes some policy on how their company makes revenues, they stress out, they panic, and they sell. And you're going to see all of that with SoFi. People are trying to do swing trades and short-term plays on SoFi, hoping for many different catalysts, one of them being the student loans coming back so that SoFi can make more of the revenues that they're used to. But if that doesn't happen for them on the time that they expect, they might lose a lot of money. And so they freak out and they sell their stake so that they can protect against losing more money than they might if things don't work out in the very short term that they set up for themselves. So when you focus on the long term, right, the long term, you have the option to look at the short term and then reassess and make changes to your investment over time. But when you're focused on the short term, that's the only option you have. You've already staked your ground. Your whole plan was focused on what happens in the next 3 weeks, in the next 2 months, in the next year. And if that doesn't work out, you don't have the option to focus and change the long term because you're already losing, because you're already panicking. You've already sold and locked in your losses. So now you think the stock is bad. You think SoFi is bad because they're not going to get student loan revenues for another 6 months or whatever that is. But when you're focused on the long term, you actually see this as a great opportunity for you. Because the point of investing is to acquire more equity, more ownership. And the way you can do that more and better, more efficiently, is if the asset is cheaper, not when it's more expensive. So when we're investing, we want to see our assets rise at a steady pace, not at a quick pace. We don't want to be AMC, we don't want to be GameStop, because you don't get to acquire equity at cheap rates that way. You only get to go along for the ride if you already have equity and you're happy with what you have. Because once it goes up 10x in 2 weeks, you're not going to buy more of that because you can afford it, and you will be dumb to buy more of that because nothing has changed in that last 2 weeks to make GameStop or AMC worth more. The only thing that's changed is people's sentiment on it, the momentum, the market's feelings about a possible short squeeze or some other short-term situation that's going to fade immediately once all the momentum is gone. So when you focus on long-term, you can take the time, get your paychecks every 2 weeks, and then put a portion of that to your equities, to acquiring more equity in your favorite companies, your highest conviction plays, like SoFi. So I want to see SoFi stay cheap for the short term, for the midterm, because I'm going to get paid every 2 weeks for the next 52 weeks and the next 52 weeks after that. So I'm going to put in 26 paychecks next year into SoFi. And the cheaper SoFi is in the short term, the more bang I can get for my buck, the more shares I can get, which means I get more equity. The game is to acquire as much equity as you can. So the cheaper it is, the more you get. The more expensive it is, the less you get. But the reason you want it to stay cheap, despite the fact that the higher it goes, the more expensive it is, the more valuable it is to you, is that you know something about the long term. You believe in the company's ability to appreciate their assets' value over the long term. So you're seeing the future. You're looking to the future and saying, hey, this company's gonna be worth $1 trillion tomorrow, $500 billion, whatever it is tomorrow. Today is worth 10x less than that. But tomorrow, if things go the way I see it going, if the management team that I believe in does what they say they're going to do and more, I see 10x in the future, right? I see 10x, I see 20x, maybe even multiples of that in the future, 10, 20 years, 30 years into the future. So while it's 10, 20x cheaper today than what it's going to be in the future, I want to acquire as much as possible at these cheap prices, these long-term discounts. So I'm happy when I see bad news. I'm happy when I see people selling the shares because my average on SoFi is $18.50. If I can get that lower at 14, 13, even 15 or 16, I'm very happy because now my average price goes down while I acquire more equity, more percentage of ownership of the company. So I acquired 2x more today because it went down in price because of someone's panic over a temporary policy from the White House. I buy more and then I benefit from the appreciation of the value of this asset over the long term. The long term. That's what you have to focus on. When you see red, when you see sell, you don't run away. You run to that sale and you buy. You buy the dips. So long as you believe in the future of the company, you understand what they're doing, what the management is doing, you believe in what they're doing, and you have the money and you're willing to put on the line, bet on the future of this company, there's no reason to be upset. So long as you're investing money that you don't need tomorrow, that you don't need in the short term. If you're investing money that you need in the short term, you're doing it wrong. You want to invest money that you don't need in the short term, that you're going to be able to keep in your investments over your long-term investment horizon. If you're investing for 10 years, you need to go in knowing that your money that you're putting in isn't coming out unless you have a real emergency that you need to liquidate your assets for as a last resort. If you're not doing that, if you're not planning to keep your money invested for the long term and something goes wrong, like a short-term policy change in the White House or Congress or from whoever, or a pandemic happens to hit, I don't know why that would happen, right? That's never happened before. You're going to panic. You're going to sell. You're going to actually lose money because you don't lose until you sell. And then you'll be sad and you're going to say, oh, the stock market sucks. Why did I invest in the stock market? It's a scam. I'm taking my ball and going home. Never coming back. I'm going to stay poor. I'm going to blame everyone else for my decisions. But you won't realize that you could have averted all of that if you just focused on the long term. So that's why I always say here, the long-term game is what you need to keep your eye on. Time in the market, right? Time in the market beats timing the market. That's a well-known quote, and that's for a good reason. The best investors have proven it. But back to SoFi. SoFi didn't get their student loans revenues in the last quarter. But guess what? I'm Lincoln, and you are watching bullacademy.org. If you enjoyed this video, please do remember to like it below, subscribe to the channel, hit the notification bell, and comment your thoughts below. All of your engagement means a lot to the channel and helps us grow because YouTube's algorithm won't recommend our videos unless you engage with it. Thank you, and now let's hop in. They beat revenue projections. They beat their earnings expectations from analysts, people who do this for a living, who analyze companies and say how much they're going to earn in a given quarter and why. SoFi beat their expectations despite not having student loan revenues that quarter. And they beat it pretty significantly. So I'm not too afraid about what's going to happen to SoFi between January and May of 2022 when the student loan moratorium continues. Because I've seen SoFi have its other business units pick up the slack for its student loan division. They're building a very well-rounded company. So you always hear me say, I myself, because I'm poor and want to build wealth, I'm concentrating my investments. I'm investing in very few things because that gives me the ability to acquire as much equity in the companies I'm most passionate about and gives me the resources to focus on very few companies so that I actually have a better chance of success in those few investments. Because I can focus all my resources on knowing, understanding, and believing in those companies, right? And then holding them. But for the companies I'm actually investing in, I want companies that are diversifying their revenues. And SoFi is doing exactly that because if one fails or one is not performing as expected, the others are going to pick up the slack. So SoFi, the one-stop shop online bank, who will soon become a national bank with an actual bank charter, which will allow them to actually hold deposits from their customers, cutting out the middleman, which means increasing their margins while providing better rates to their customers. That SoFi has many different business units. They do many different things. So when one fails, the others pick up the slack. And I've covered SoFi in so many videos. We've actually, most recently, we've done a whole video series, 2 videos on the story of SoFi and where they came from, scandals they've been through, how they survived, how Anthony Noto came and took the company public and actually kept them alive and rebranded the company to what it is today and is now taking over the fintech market. So if you don't know about SoFi and you're investing in it, we have many videos that will help you understand it so that you're not panicking because you don't understand the future of your company that you're investing in. Because you need to understand it. And once you do understand it, you will see why these short-term situations like policy changes are not as big of a deal as people make them. And they're actually in your favor as a long-term investor. Because when SoFi was at 13s and 14s back in June and July and August, I was buying up thousands and thousands of shares because that's incredibly cheap in relation to what I see it being in the next 2, 5, 10 years in the future. So I was buying them up. So when I saw it dip again, just this last few weeks, I bought more. And when that happens because of this new policy change, I'm going to buy more at cheaper rates and acquire more equity, more ownership of this stock that I believe in for the long term. Because I understand the company's past, present, and future. And we haven't even talked about Galileo yet, which is currently undertaking a groundbreaking effort to move all of their services to the cloud so that they can offer more services to their customers, their fintech customers, because 95% of the neobanks out there run through SoFi's Galileo. And if you don't know that, we've covered a video on that. SoFi will be everywhere. Go watch that video. One of the most important videos that I've done on SoFi. Understand the many different divisions of this company, and you'll see why just one not performing up to par, up to what it was in the past, isn't a huge deal for the long term, especially when it's a temporary policy change. So I'm wearing my SoFi shirt today. I can't tell if you can see it. I'm a little sick, but I just want to come out here real quick and just let you all know I am still investing in SoFi. I believe in it. And I'm unfazed by all of this. We were just discussing this in our Discord channel at patreon.bullacademy.org with our patrons who support this channel and keep us going. We were discussing what this all means for SoFi. And I was telling them, hey, I'm happy. I expect to make more money next year. And that means I can buy more SoFi. And now it's going to be cheaper for the first 5 months of the year. I get to buy even more. So that's my stance on all of this. I haven't been out here for a while doing these renty or off the top videos, but I want you all to know that there's nothing to be worried about, at least for this policy change. Things are always going on in the world. Businesses can fail any moment without any notice, but it's unlikely. And specifically for this situation with the student loan moratorium, I'm not worried. I have thousands and thousands of shares of SoFi. I'm gonna buy more. I'm rejoicing because I'm looking at the stock right now, and today it's down, and I don't have any money right now. But in the next 2 weeks, I get another paycheck. Another 2 weeks after that, I get another paycheck. And I can buy more SoFi under 15, under 14, under 13. If it goes down to 10, I'm going to do whatever I can to buy as much as I can. I'm gonna go figure it out, right? I'm going to go find the money if it gets to 10 for whatever reason. So yeah, with all of these headlines, you want to know what's going on. You want to see the headline. You want to understand what's going on with them, why people are upset, what the arguments are, who is affected, who's doing what. But you have to make your own mind up. Don't just look at the market and say, oh, it's going down, I want to sell too. You're not a robot. You have your own experiences. You have your own knowledge. You know things about this world. You've seen things, right? You know a thing or two because you've seen a thing or two, right? Who is that? Farmers? I think that's their slogan. And it makes sense. You know a thing or two about SoFi and the markets and fintech. Hopefully you do, right? If you're investing in it. And if you don't, go do your research. You can't just be investing on hope. You need to have research. You need to have knowledge. There's information out there that you need to have. Because the greatest risk to an investor is information asymmetry. If I know more about SoFi than you do, and we're both investing in it, I have a much better chance of success than you do. Because I will know things that might be critical to the success of the business or failure of the business that you don't. And if I know that before you do, then I get to sell or reposition however I need to survive any impact. Or if I know more positive things, I'm going to buy more before you can and at cheaper rates than you can. Which means I get more equity than you do and I win the game. Right? And at the top, people who own a lot of the equity, that matters a whole lot because they get to say what happens at the company, who controls what, who does what, who is a CEO. We're not just trading collectibles and pet rocks. These are actual companies. And your ownership matters. You have voting rights. So you want to acquire as much equity as possible at cheaper rates. And the only way to do that with as little risk as possible is by understanding, right? Knowing about the company. So that's why I do these videos, so that you can see what's going on with these companies, where they came from, what they're doing now, and what they might be doing in the future. So that you can invest and have a better chance of success on the stock market for the long term. As long as you're practicing the bull mentality, right? So that's all I have for you today. I hope you enjoyed this video. If you did, do me a favor,
Please clap.
Oh no.
Like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts. It's very important. Part of the reason I don't do as many videos anymore is because there's not enough engagement. And because of that, YouTube doesn't promote my videos. I don't share my videos with other people to help grow the channel. So if you're out there watching these videos and you enjoy them, I know you all do, please don't forget to hit the like button. It means a lot and it will keep this channel going. You doing your part by liking and engaging on these videos, and our patrons doing their parts by supporting the channel financially and helping me brainstorm new video ideas in our Discord channel at patreon.boacademy.org. All of that keeps this channel going, keeps it growing so that I can bring on more help like Danielle, who I hope you all saw in the Roblox video a few weeks ago. What was that, last week? Yeah, something like that. I hope you all enjoyed that, and all of that is possible because of your engagement of our patrons. Right, so I need you all to keep doing more of that, and I will continue to bring more videos to you all and continue to grow the team so that we can all learn together and try to cut down the information asymmetry in the markets so that we all have a better chance of success. I'm Lincoln with boacademy.org. Thank you again and have a great day.